Copy trading has emerged as a popular strategy among investors who are looking for passive ways to grow their wealth. By automatically replicating the trades of experienced professionals, individuals can participate in financial markets without needing to make complex decisions themselves. This approach appeals to those who may lack the time or expertise to actively manage investments. Over recent years, platforms offering copy trading have seen significant growth, attracting both beginners and seasoned investors. The promise of potentially earning profits by following successful traders has fueled its widespread adoption. As technology continues to advance, copy trading is becoming more accessible and user-friendly, making it an increasingly attractive option for those seeking alternative income streams. Copy trading is a method that allows investors to automatically replicate the trades of experienced or professional traders. Once you select a trader to follow, your account mirrors their buy and sell actions in real time, using your own investment funds. This process is typically facilitated by online platforms that connect users with a wide range of traders, each with their own strategies and track records. You can usually customize how much capital you allocate to copying, and some platforms offer tools to manage risk, such as setting stop-loss limits or adjusting leverage. The goal is to benefit from the expertise of seasoned traders without needing to actively manage every trade yourself. However, your results will depend on the performance of the traders you choose and the settings you apply. Copy trading offers a hands-off approach, but it's important to understand how the process works before getting started. Recent statistics provide valuable insights into the potential profits from copy trading. In the first half of 2023, Bitget reported that over 109,000 users collectively earned more than 74 million USDT through copy trading, with 93% of futures traders and 82% of spot traders achieving profits. Looking ahead, SmartT's 2025 report suggests that most responsible copy traders can expect monthly returns ranging from 5% to 15%. These figures demonstrate the attractive earning potential of copy trading when executed carefully. However, actual results may vary depending on market conditions and the strategies of the traders being copied. Several key factors determine how much you can actually earn from copy trading. The most important is the quality of the traders you choose to copy. Those with proven strategies and consistent track records tend to offer better results. Your investment capital also plays a role, as larger amounts can amplify both gains and losses. Effective risk management strategies, such as setting stop-loss orders and diversifying your portfolio, help protect your funds from unexpected market swings. Lastly, overall market conditions can greatly influence outcomes, with periods of high volatility presenting both opportunities and risks. By carefully considering these elements, investors can better position themselves to achieve favorable returns while minimizing potential losses. Choosing the right traders to copy is a crucial step in maximizing your returns with copy trading. Skilled traders with a proven track record and well-defined strategies are more likely to deliver consistent results over time. By carefully reviewing a trader's past performance, risk management practices, and overall approach, you can better assess their reliability. It's important to look beyond short-term gains and focus on traders who demonstrate steady growth and disciplined decision-making. This thoughtful selection process helps reduce risks and increases your chances of achieving sustainable profits in the long run. Effective risk management is essential in copy trading to protect your investments and minimize potential losses. One widely used technique is the stop-loss order, which automatically closes a position when it reaches a predetermined loss threshold. This helps prevent significant drawdowns if the market moves against you. Setting limits on leverage is another important strategy, as excessive leverage can amplify both gains and losses, increasing overall risk. Diversifying your portfolio by copying multiple traders with different strategies can also reduce exposure to any single market or trading style. By combining these approaches, investors can create a more balanced and resilient copy trading experience. Market volatility plays a significant role in determining the success of copy trading strategies. Sudden price swings or unexpected economic events can impact the performance of even the most experienced traders, leading to potential losses for those who follow their trades. External factors such as geopolitical tensions, regulatory changes, and macroeconomic shifts can also influence market conditions, making outcomes less predictable. During periods of high volatility, strategies that previously performed well may struggle to adapt, affecting overall profitability. It's important for investors to recognize that copy trading is not immune to these risks. By staying informed about market trends and external influences, traders can make more informed decisions and better manage their expectations. It's important to remember that profits from copy trading are never guaranteed. Even when following experienced traders, market conditions can change rapidly and lead to unexpected losses. Always take the time to thoroughly research the traders you plan to copy, examining their track records and understanding their strategies. Responsible investing means only committing funds you can afford to lose and avoiding excessive leverage. By staying informed and cautious, you can better manage risks and set realistic expectations for your copy trading journey. Copy trading offers investors an accessible way to potentially earn profits by mirroring the strategies of experienced traders. However, the actual returns can vary widely, influenced by the trader you choose to follow, your risk management practices, and market conditions. While some users have reported impressive gains, it's important to remember that no investment method is without risk. There are no guaranteed profits, and losses are always possible. Approaching copy trading with careful research, thoughtful planning, and realistic expectations can help you make more informed decisions. Ultimately, success in copy trading depends on your ability to balance opportunity with caution.